Assalamualaikum warahmatullahi wabarakatuh. I am Zumarati Makalimbang from Bais 4B and I am the first reporter from the Group 8. Our topic is all about the evolution of global Islamic financial industry and Islamic finance and banking in the Philippines. My part is to discuss the performance of Islamic banking practices in the Middle East case. Islamic banking and finance is the fastest growing industry in the financial world. It has been experiencing exponential growth in three regions of the world, namely the Middle East, South Asia, and Southeast Asia. The Islamic banking and finance system continue to grow by seeking innovation and diversity of products, clientele, and markets. It has been growing in areas such as sukuk, takaful, hedging funds, mutual funds, private equity and assets management, wealth management, real estate, corporate finance, liquidity management, treasury, derivatives, swaps, future and forward market, Islamic stock exchange, and Dow Jones Islamic Index. Islamic banking and finance activities are mainly clustered around three parts of the world that include the Middle East, South Asia, and Southeast Asia. The Middle East is overwhelmingly populated by Muslims. It is the motherland of Islamic banking and finance. Islamic banks enjoy strong support from rich individuals, governments, and other state institutions in the Middle East. Each nation appears to have its own opinion on how to administer certain Islamic financial products. This is hampering efforts for a globalized system of Islamic banks. There are several reasons for these differences. The main reason is because the application of the theoretical aspects of the Islamic banking system differs from country to country and under different economic conditions and social environments. Another reason for the differences is due to the different madhabs, which is the schools of religious law. There are four main madhabs, namely Hanafi, Shafi'i, Maliki, and Hanbali. These madhabs play an important role in developing Islamic jurisprudence in countries around the world. The practice of Islamic banking and finance acquired significant shape and momentum by the end of 1970s due to increases in the general economic prosperity of the Middle Eastern countries. The Middle Eastern Islamic financial institutions receive increasing socio-political economic support for their growth and prosperity. Many reputable Islamic banks came into being, including the Nasser Social Bank, Cairo, Islamic Development Bank, Dubai Islamic Bank, Kuwait Finance House, Faisal Islamic Bank of Sudan, and Dar al-Ma'al al-Islami. Islamic banking and finance is gaining momentum in the USA and European countries. These countries are now more willing to bring changes to their banking and tax laws so as to allow the Islamic banking and finance practice in their markets. The increasing number of ethically based business organizations and individuals worldwide are dealing with Islamic financial institutions. The Middle East, Southeast Asia, and South Asia are the main emerging hubs of Islamic banking and finance. At present, there are about 300 Islamic banking and financial institutions across 75 countries holding a paid-up capital of over 13 billion US dollar, controlling assets with 300 US dollar to 500 US dollar in investment. 500 billion US dollar to 800 billion US dollar with an average annual growth of 15%. It has been estimated that Islamic banking and finance industry will reach to 4 trillion by 2010. It will hold 40% to 50% of total savings of the Muslim population worldwide with next 8 to 10 years. The Middle Eastern countries are highly promising, featuring a stable currency and lower interest rates and inflation over the years. Having gone through radical restructuring in recent times, Middle Eastern markets are now more regulated, transparent, and integrated at both the regional and international levels. The Middle Eastern regions also enjoy greater political stability, law and order, and are therefore emerging as a hotspot for international business, finance, and investment. The Middle East is the mainstream of Islamic banking and finance. Islamic financial institutions are making individual and collective efforts to develop a wide array of innovative, customer-oriented, and competitive products services to their clientele. It is their core objective to get stronghold over the indigenous oil wealth and discourage its outgoing to financial institutions in the European and Western world. Recent market development suggests that the Islamic banking and finance industry is a big success and enjoys a very strong regional support. An increasing number of conventional financial institutions in the Middle Eastern markets are converting their operation either fully or partially on Islamic lines, which could pose a serious threat to a long-established legacy of conventional banking in the region. Bahrain is the biggest hub of Islamic bank and finance affairs worldwide. The country hosts 33 Islamic banks and 26 takaful and 3 retakaful companies which operate at both the domestic and international level. Bahrain is also a hotspot for international trading in sukuk, Islamic equity funds, mutual funds, and other investment instruments. Most of the Islamic institutions such as Accounting and Auditing Organization for Islamic Financial Institutions, International Islamic Financial Market, and Islamic International Rating Agency are located in Bahrain, with the country also planning to establish its own Sukuk exchange center in the future. Bahrain is sitting on the top of Islamic banking affairs worldwide. It is the house of Islamic banking practice, regulations, research, innovation, and scholarship. It hosts the largest number of Islamic financial institutions and other supporting bodies. In 1978, the first Islamic bank, Bahrain Islamic Bank, was established in the country. There are 351 financial institutions in Bahrain, out of which 33 are Islamic with a total capital of 2.24 billion US dollar. Islamic banking operations in Bahrain are undertaken by full-fledged commercial banks, offshore banking units, and investment banks. A significant number of Islamic banks use Bahrain as a base to operate in the Gulf, European Union, and North America. Bahrain also hosts the biggest takaful industry of the Islamic finance world. Presently, there are 6 takaful and 3 retakaful companies in Bahrain. Dubai International Financial Center is promoting trade in Sukuk regional and international levels. Bahrain plans to establish Sukuk Exchange Center, which will enhance the investment in liquidity options for Islamic financial institutions in the Middle East and elsewhere. Iran is embarking upon a nationwide Islamic bank finance practice after the Islamic Revolution in 1979. In the first 2 decades, Iranian Islamic banking and finance practice remains highly centralized and isolated from both the Islamic conventional markets. The Iranian government is keen on increasing its interactions with Islamic banks and financial institutions as well as the conventional financial market worldwide. It is a novel feature of Islamic banking practice in Iran that it has been adopted at state level since the Islamic Revolution 1979. In the early 2 decades of Islamic banking practice, the Iranian banking sector was highly centralized and did not share much from the pool of knowledge, experience, and development in global markets as well as Islamic banking world. After mid-1990s, however, the Iranian government showed some inclination towards adopting privatization and deregulation in the financial sector. The Iranian government has been working on evolving more flexible, competitive, and innovative financial system in the country. The growing global exposure and the regulation of the oil-rich Iranian economy and financial sector may bear far-reaching implications on Islamic banking growth and development in Iran. The Iranian government should achieve greater integration of its Islamic financial sector with global finance as well as Islamic banking and finance world. Jordan's Islamic Bank has been the pioneer of Islamic banking finance since 1978. It held 10.1% of the total investment of the Jordanian banking industry in 2006. Jordan Islamic Bank has been dominating the Islamic banking practice in Sudan since 1978. Presently, it operates through 64 branches and cash offices established across the country. It also offers mutual insurance funds and products in the financial market of Jordan. It held 10.8% of total investment facilities of the local Jordanian banking industry in 2005. In March 1997, another Islamic bank, Islamic International Arab Bank, was established in Jordan. It has 12 branches that offer a wide range of products and services to their customers. The government of Jordan aims to use Islamic banking and finance as a tool to attract business and investment from regional and international players of the Islamic banking world. Kuwait also hosts the largest number of Islamic financial institutions and ranks third in terms of Islamic banking assets, which are worth of 22.7 billion US dollar. The country hosts the oldest and biggest Islamic bank with Kuwait Finance House, established in 1977. Kuwait hosts the largest number of Islamic financial institutions. It has been ranked as third in terms of holding the Islamic banking assets of worth of 22.7 billion US dollar. It is estimated that Islamic financial institutions in Kuwait will manage funds about 56 billion US dollar by 2010. The establishment of Kuwait Finance House in 1977 laid down the foundation of Islamic banking in Kuwait. Kuwait Finance House has made great success over time, and presently it has been successfully competing with 12 conventional banks and 3 specialized government banks in the Kuwaiti financial market. Islamic finance and insurance activities have also rapidly grown in Kuwait. Currently, 5 takaful and 1 retakaful companies are operating alongside 18 conventional insurance companies in Kuwait. In Lebanon, during the year 2006, 4 new Islamic banks emerged, namely Bloom Development Bank, Arab Finance House, Al Baraka Bank, and Lebanon and Credit Libani. The Central Bank of Lebanon has a plan to introduce sukuk and takaful services in its market over the next couple of years. The Islamic banking institutions are passing through an embryonic stage in Lebanon. The Lebanese parliament passed Islamic banking laws since February 2004, which legitimized Islamic banking operations in the country. By the end of 2006, 4 Islamic banks emerged in Lebanon, namely Bloom Development Bank, Arab Finance House, Al Baraka Bank, Lebanon, and Credit Libani. 4 applications for establishing new Islamic banks were looking for the government's approval at the same time. Conventional banks in Lebanon are encouraged to establish fully dedicated Islamic banks, but not permitted to establish their own Islamic window. Presently, Islamic banking assets amount to 60 billion US dollar with a growth rate of 10% per annum. The Central Bank of Lebanon expects the Islamic banking will be able to secure 5 to 10% of the total financial market of Lebanon within next 3 to 5 years. The Central Bank of Lebanon aims to introduce sukuk and takaful products so as to gradually expand the base of Islamic banking and finance in the market. The government embarked on the Islamic banking project to enrich its market with Islamic business and finance from its next door countries. Qatar is another hotspot for Islamic banking finance in the Middle East. There are four major Islamic banks in Qatar, namely Qatar Islamic Bank, Qatar International Islamic Bank, Doha Islamic Bank, and Al Rayyan Bank. Qatar is another hotspot for Islamic banking and finance affairs in the Middle East. There are four major Islamic banks in Qatar, which is the Qatar Islamic Bank, established in 1983, Qatar International Islamic Bank, established in 1991, Doha Islamic Bank, established in 2006, and Al Rayyan Bank, established in 2006. Other financial institutions that include First Finance Company, Investment House, Al Jazeera Islamic Company, and Islamic Finance Securities are delivering Islamic retail products and brokerage services in the country. Qatar Islamic Bank has decided to establish Islamic Investment Bank of Qatar with $1 billion capitalization at Qatar Financial Center. Islamic finance and insurance activities have registered a rapid growth in Qatar. In 1994, Qatar Islamic Insurance Company was established, which has now become one of the leading insurance services providers in the country. The Qatari government is ambitious to take up the infrastructure and development projects worth billions in the country. Islamic financial institutions can play a very effective role in economic growth and development of Qatar. Islamic bank and finance have achieved a rapid growth in Saudi Arabia over recent years. There are two major Islamic banking and finance players in Saudi Arabia, namely Al Rajhi Banking and Investment Corporation and Bank Al Jazeera. Conventional banks are also serving the Islamic banking and finance clientele by establishing their own Islamic window and subsidiaries. Other Islamic banking and finance includes Al-Bilad, Amlak Finance, and Dalala Al-Baraka Saab Takaful Company. In July 2007, signed underwritten agreement for its sukuk issuance for a total amount of 3 billion Saudi riyal. Islamic banking is making good headway in Saudi Arabia despite the fact that there are no separate Islamic banking laws in the country. There are two major players of the Islamic banking in Saudi Arabia, which is the Al Rajhi Banking and Investment Corporation and Bank Al Jazeera. Conventional banks are also serving the Islamic banking clientele by establishing their own Islamic window or subsidiary. The Saudi financial sector comprises of 14 commercial banks and 5 credit unions and holds assets of worth over 20 billion US dollar. Islamic banking operations capture 64% of the total market share in Saudi Arabia. Saudi Arabia hosts the Islamic Development Bank, which is performing a very crucial role in promoting Islamic banking practices in the Muslim world. The entry of Syria into Islamic banking and finance club is among the most recent developments in the Middle East. By the end of 2006, the Syrian government permitted 3 Islamic banks, namely Al-Sham Bank, Saudi Dalat, Al-Baraka Bank, and Syrian International Islamic Bank to launch their operation in the country. Moreover, the other Takaful companies, namely Aquila Insurance Company, Al-Nur Insurance Company, and Syria Qatari Company were established as well and are ready to operate in the Syrian market after receiving the license from the Syrian Insurance Supervision Committee. The entry of Syria into the Islamic Bank Club is one of the most recent developments of the Islamic banking in the world. The Syrian parliament approved Islamic banking laws in 2005. By the end of 2006, the Syrian government permitted 3 Islamic banks, namely Asham Bank, Saudi Dalat Al-Baraka Bank, and Syrian International Islamic Bank to launch their operations in the country, whereas 6 applications for establishing Islamic banks were under its consideration. Moreover, 3 Takaful companies, namely Aquila Insurance Company, Al Noor Insurance Company, and Syrian Qatari Company are planning to launch their operations after seeking their license from the Syrian Insurance Supervision Committee. Al Qatar Islamic Insurance Company plans to establish its subsidiary in Syria. Syrian International Islamic Bank, along with its Qatari partners, has applied for launching one takaful company in Syria. Islamic financial institutions and investors from the Middle East are underwriting share capital of new Islamic banks and takaful companies in the country. Islamic banking and finance institutions may help in integrating the Syrian financial market with mainstream Islamic banking and finance system, which are rapidly growing across the Middle East region. That's all for my topic, and thank you.